Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about, boy, you guessed it, swing trading. Now, we are going to be breaking down pretty much how to grow a swing trading account to $10,000. So I hope you guys all enjoyed this. If you guys have any questions, by all means, ask down below. And if you guys want to learn more about swing trading and trading in the market, check out my school. It's absolutely fantastic, the Swing Trading Masterclass. And right now, you guys can use code YouTube, all caps, to get 20% off. We have private live streams, we have quizzes, we have lectures, group chat. It's absolutely fantastic. It's a one-stop shop for all of your swing trading needs, so check it out down below. But guys, let's jump into this here. So when it comes to swing trading and trying to grow a small account, I think a lot of people think and need, to understand that, one, you don't need $1 million to get started with trading. All you need is a solid strategy. So if you're just starting out, whether this is your first year of trading or maybe your first couple of months, focus on education. Trading has that association of getting rich quick, but you need to take that and throw it out the window, because swing trading is not an easy way to get rich quick. In my opinion, you need to look at it as a career, and the best approach you need to have is like a doctor or an engineer. It takes years of practice and hard work and education before you ever see any money coming in. So you need to have that same approach. Paper trade, learn as much as you can. Practice, all that stuff is going to be what makes or breaks a swing trader. Now, another thing that I do want to break down with you is a lot of people think that, when you have $100 in your account, you need to grow it to $1,000. No, with swing trading, it's all about consistency, right? As a trader in the market, our job is one thing, and that is to make money. That is why we swing trade. We don't do it because it's the end thing to do or because it's easy. Trading is far from easy, but a lot of people think that if you have $100, you should be trying to hit profit $100 the same day, right? You need to throw that out the window and understand the 1%, 2%, 3% returns are going to be what makes or breaks you as a trader and just being consistent. So let's talk about a strategy that I absolutely love and one that I would highly recommend for all types of traders, whether you're just starting out or you're a full-time trader. So this is a stock here, ticker symbol CAL. Now, we called this out in actually yesterday's or 2 days ago's live stream, and you guys can see as of today the stock is up almost 4%, which is an absolute fantastic move. So why did we call this out? One, we have this really nice upward trend. As we look at it, you guys can see the stock has gone from lows at about $16 all the way up to highs at $41 in the matter of about a year. So we've seen a really solid growth on this. Now, as we zoom in here, what do you guys notice about this blue line? This blue line here is what we call the 90-day moving average line. So as we look at it, you guys can see it hits it several times, and each and every time, if you guys look at it, you guys will notice we see buying pressure. So buying pressure, buying pressure, buying pressure, buying pressure, buying pressure, and recently buying pressure. So looking at it here, where would you want to buy this stock? Obviously, as close as you can to the moving average line. So you guys can see hopping in near and around about $35, setting your stop loss just below it gives a really nice risk and reward ratio. So as we look at it here, if we set our stop loss just a hair below it, near and around, 35, 37, setting our target up at resistance, we're risking about $1 to make $5. With this type of strategy and trade, you could be wrong 4 times and still make money on this type of trade. So having a good risk and reward, a good target, but overall, it's still a really good stop loss. Now you might be saying, Carter, where do you put your stop loss? It all depends on you and how risky you want to be, because if you hop in here, you could set your stop loss all the way down here, but if you guys look, your risk and reward goes out the window. So having a good one, I recommend keeping it around 2% for people that are just starting out. Now, another indicator that we absolutely love here is something called the RSI, also known as the Relative Strength Index. Now, you guys can see it was trading for near and around a 31 on the RSI. Let's look at the last point. It was trading for a 31 and see kind of what happened, right? So you guys can see it right here. It was trading for near around a 21, so it was even under that point. We still had this great move. As we continue to look back here, another point was all the way back in here where we had this great move. Another one was right in here where we had this great move. So looking back at the recent points of the RSI is another clear indication of should you buy this position. The last thing that I always do to determine if I should buy it is look at other time frames. So I will go and look at the hourly chart and see how it's reacting. And you guys can see that you got the second it fell below these moving average lines, right? It was just selling off like crazy. So we're not going to try to buy it here. We're going to try to buy it as it starts breaking out of these moving average lines. And if you hopped in near around 36, you could just set your stops just a hair below it and have a really, really good risk and reward ratio. So looking at other time frames and looking at the chart and stock all in depth before you place a trade is going to be super, super important. Now you may be saying, well, Carter, this is only a return of 3-4%. Yes, growing a small account, whether you have $100 and you're trying to turn it into $1,000 or $10,000, whatever it is, it's just consistency. The great thing about trading is the profit you make today can be used as leverage tomorrow. So if let's just say you made, let's just say $100 off this trade. Now on your next trade, you can leverage that profit and make $110. And then if you profit on that, it could be $130. So you're starting this compound effect, which is great, but you still need to understand your risk management. The last thing that I do want to talk about today before I leave is going to be emotions. Emotions with trading is one of the most important things traders need to understand. You need to be stone cold. And what I mean by this is you need to, one, not have any fear, have full confidence in what you're doing. And the best way to approach that is to learn and paper trade and get experience. That's what I would recommend doing. And then slowly start introducing cash and capital so you build tolerance to your emotions in trading. Another thing is don't listen to friends. Don't listen to friends. Your friends will tell you to buy GameStop, to buy AMC, to buy all these random companies that you probably never heard of. And by the time they tell you, that stock is on its way down. So focus on yourselves, focus on base hits. Don't try to hit home run trades. Just focus on base hits of those 1, 2, 3% returns, and you'll be in a fantastic spot 2, 3, 4 years down the road. If you guys have any questions, you guys are more than welcome to ask down below. And don't forget to check out my amazing swing trading school. And right now you guys can use code YouTube to get 20% off. So check it out down below and I'll see you in there. But guys, I hope you guys have a fantastic rest of your day and have a good one. But I'm excited for this week. We have a whole bunch of fantastic opportunity, and the new Ethereum ETF is probably going to get announced. So let me know if you guys are buying that. We'll see you guys in the next one. Like, subscribe, and we'll see you guys. Take care.